Okay, hello everyone. We're back for another show. Welcome back to TakeStock Live Investor Series with a very special year-end feature here coming up for you. First, I'd like to thank everyone who's made this year-end special possible and actually made the whole show this year in 2020 happen, turning TakeStock conferences into TakeStock Live. Thank our supporters here. I'll just toggle off for a sec. Thank you to the TMX group, TMX Venture, for presenting in association with us this show. Thank you to Fasken, to the CSE, Olympia Trust, Lee Jones Gable, MNP, Calgary Meg, and CIM. Also, thank you to InvestmentPitch Media and the Newswire for help getting the word out, and a very special thank you to Sterling Capital, Conduit Capital, Harbor Access, and CHF Capital Markets for partnering with us and hosting various of these shows. I'll give you a little word here on Sterling Capital. We're going to be co-hosting this show with Sam Greer of Sterling Capital. Sterling Capital is a Calgary-based investor relations company that focuses on mining and has been in operation since 2005. With us today is Sam Greer, president of Sterling, and he'll be taking over a little bit later in the show. Before we get to that, I'm going to give you the next slide here and tell you about, well, you can read it. Got a Christmas party coming up. What am I going to tell you about the Christmas party? It's in 2 weeks' time. Come meet your friends. It's a new platform that we're going to be trying out. It's sort of this table, so you can actually come in, look across the room. If everybody's loaded up their profile properly, you can see your friends at a different table, jump back and forth, network, socialize. We're also going to be inviting select companies to come and give a very brief 1-minute elevator pitch and then circulate. So for the first hour on Wednesday, the 16th of December, from 2:15 to 3:15, so that's from just after market close, our regular slot, we'll have a structured time where the companies circulate from table to table and you sort of meet and greet. And then the following hour, for those who want a more open format, it'll just be, do whatever meetings and hang around. Feel free to make merry, etc. Looking forward to trying out this platform, so hope you can all join us. There is a limit, though, on the number of seats that we get on this trial version. So, after the show, please go to TakeStockLive.com if you want to join us. Make a point of going and grabbing a ticket while there is one. And even if you don't get one, please remember to sign up for one of the waitlisted seats, and if we get enough interest, then we'll expand the format so we can get a larger show. And with that note, I think this is the point where I turn it over to my colleague Mark Francis. Take it away, Mark.
Thank you very much, Raj, and welcome all of you, our attendees and guest presenters. Note our disclaimer. This presentation is for information only and is not a solicitation to buy or sell stock. Companies pay fees to present at TakeStock and TakeStock and its principals. Raj Joshi and Mark Francis may have equity investments in companies we invite to present, may consult to the companies, and make no representation or investment or other recommendation in regards to these presenting or any other companies. You should do due diligence and seek professional investment advice. Some housekeeping matters for attendees. You will note a red Reconnect tab at the top of your screen. If you lose audio, just click it and you will be reconnected. Normally we run about 45 minutes, might run a little longer today with Al Turner as our question moderator because he always has such excellent questions. And the chat board may be utilized in this session in particular for asking questions. Please be clear as to whom your question is being addressed. Each of our presenting companies will have a presentation with their PowerPoint, 6.5 minutes, followed by a panel discussion with the Q&A led by Al Turner, of course, and from Calgary Meg, and whose support is really appreciated. We encourage you to do your due diligence. Go to CDAR and connect with the companies directly in order to get detailed information. Contact details for the presenters can be found on our website, TakeStockLive.com. And I neglected to mention that on the 6.5 minute time limit, when they are 15 seconds away, you will see, I believe it'll be Raj showing up, and that's when you know that they are approaching their time limit and their time budget. So at this point, I will turn the mic over to Captain Sam Greer, co-owner of a modest sail-powered craft, to introduce our guest speakers. Sam?
Okay. Mark and Raj, thanks very much. As always, it's great to be here. We have three companies we quite like at Sterling presenting today. Doug Ramshaw, the president of Minera Alamos, will be giving the first story. This is a gold development company with a portfolio of high-quality Mexican assets that is poised to join the ranks of gold-producing companies next year. Stephen Barrica, the CEO of Angkor Resources, will be giving the second presentation. This is a Canadian natural resource company focusing on the development of base as well as precious metals and oil and gas assets in Cambodia. The third presentation, not mining, but something I think you'll quite enjoy. This George Palikaris, the president and CEO, will be presenting Metamaterial. This is a technology story that designs and produces highly functional products that master and manipulate light. They apply this technology to revolutionize everything from solar solutions to aircraft safety to wearable technology. So leading the first presentation, as I mentioned, is going to be Doug Ramshaw of Minera Alamos. I've known Doug for many years. He's a senior executive and corporate director with more than 20 years experience in the mineral resource sector. His work has focused on mineral project evaluation, M&A, and business development strategies supporting corporate growth. Doug has previously worked as a mining analyst for an independent brokerage firm in London, UK, and has served in various executive capacities for a number of publicly listed junior resource companies. He holds a Bachelor of Science in Mining Geology from the Royal School of Mines. Doug, absolute pleasure to have you here. Please tell us about Minera Alamos.
Okay, I will start my 6.5 minutes. Well, good day, everyone. It's a pleasure to be here. I hope I can give, in a short period of time, a compelling thesis as to one of the best ways to play a rising gold market, or any kind of gold market, and that's to be producing the stuff. And Minera is on the cusp of joining the ranks of producers next year. But before I go into any more detail, I will be making some forward-looking statements today. I mentioned we're going into production. That's because our team is built around a group of professionals that their passion is building gold mines. Built 3 successful mines in the last 13 years, and we specialize in low capex heap leach operations, and primarily in Mexico, which offers a cost basis down there, which allows us to build these things with almost eye-popping low capital intensity. We have 3 assets. The company itself is well supported with strong institutional and corporate ownership. And whilst I won't go into too much of the project detail today, the full deck is on our website. This is more about letting you know exactly where we're poised to take advantage of this market. It's been anticipated already with a strong stock performance this year. It concluded with a $15 million bought deal financing we did with National Bank a couple of months ago. So we're sitting on roughly 25 million in cash and investment holdings, more than enough, not just to complete the construction of our first mine, but also largely the second mine that we plan to build too. We're well supported from the analyst community with 6 analysts and counting, and I would expect that to grow as we become a new staple amongst the ranks of gold producers in 2021. We've outperformed gold price, GDXJ, and our developer peers over the last 18 months. And I think a big part of that is we're one of the few developers that's actually going into production in 2021. And as I said at my opening, I think that's the key way to play a gold price. Our team, I won't go into all the team, but our board is very technical heavy. I think that's what you'd want for a team that builds gold mines. You don't want to see too many lawyers and accountants on a board. You want technical people. So a series of geologists, engineers, metallurgists. The technical side of our company is stewarded very well with the board and our management team. That have all been working together for the last 12, 13 years. I did mention we've got 3 assets. They're all 100% owned. We focus on northern Mexico. So Mexico is an interesting country. The South is a little bit like the Wild Wild West. I take my hat off to the companies operating down there. We prefer the North. We're in good jurisdictions, both Durango, Sonora, and most recently an acquisition in Zacatecas. The first mine, Santana, construction should wrap up in, we're thinking February, with first gold sometime in Q2 of next year. Thereafter, we're looking to build a second heap leach that we just acquired. Cerro de Oro in Zacatecas came out with an initial base resource of 630,000 ounces on that. We announced just a couple of weeks ago. Cerro de Oro highlights why we like Mexico. One of the biggest challenges facing the mining industry are permitting timelines. Cerro de Oro, in 2 short years, we will go from acquisition to having that project more than likely up and running in the second half of 2022. And we can do that, we can do that just because of the permitting environment in Mexico. The third project, La Fortuna, I'll show you the PEA here. This speaks to just how much we value projects 1 and 2. This was an exceptional PEA we put out in late 2018 at $1,250 gold prices, has exceptional after-tax IRR and payback, and yet that's going to be our third project to be developed. Looking forward to bringing it on in sub $500 all-in sustaining costs, just off a high-grade starter pit that we based the PEA around. So 3.5-4 gram open pit, 6-to-1 strip, slightly higher capex. So the whole point of this is projects 1 and 2 will help fund project number 3. So, our goal is to keep building. We're not in the business of going through all the development, permitting timelines purely to be bought out. The fun starts when you can utilize free cash from project number 1 to see how you can build this company's production profile. And the reality is, with a production profile from 3 assets with more to come, we don't even need a rising gold price to be a growth story. Obviously, if gold price moves as well, it can compound a production growth profile from bringing these projects on. And basically, roughly 3 mines in 4 years is a pretty good rate of growth for any company. But each of these assets in their own right can expand thereafter. As my time runs out, I got about 45 seconds, so I've done this reasonably well. In terms of news flow, you'll see updates for Santana construction, so we can guide exactly when mining should commence. We're seeing that right now at Q1 next year with first gold in Q2. We're currently undergoing an extensive phase 3 exploration program at Santana that will yield additional results in the new year. We've had our permit for Fortuna, so that's ready to build when we want to build it after the first 2 projects. And Cerro de Oro that we recently bought, we will start the permitting process early in the new year and look to be in a construction decision Q4 of next year. With 2 seconds left, thank you. The full presentation on the website.
Thanks very much, Doug. That was a great overview. Leading the second presentation is Stephen Barrica. He is the CEO of Angkor Resources. Stephen has worked in the fields of finance, communications, and government relations. His experience spans both national and international projects in both the public and private sectors. Stephen has also led the negotiation with international joint venture partners such as Jomeg in Japan, Emerald Resources Australia, and Hami Resource Canada. He oversees government relations in Canada and Cambodia and manages the day-to-day operations and public markets for Angkor. Stephen, fantastic to have you here. Please tell us about Angkor Resources.
Thanks for having me. And I'll tell you a little bit about Angkor Resources today. So as I was mentioning, we have about 150 million shares outstanding, fully diluted around 200 million, and a 7.5 million market cap today. Our management team is made up of Mike and Delane Weeks, who are founders of the company, Dennis Huet, who lives full-time in Cambodia, myself, and then we recently brought on Benita Sauer as our CFO. Cambodia is a wonderful place to operate. They spent quite a bit of energy developing infrastructure over the last 10 years. There's a really clear path to the financial systems. The banking system is world-class. National Bank of Canada actually owns the largest bank in Cambodia. You've got Manulife, PwC, all the major players are establishing headquarters in Cambodia. And there are no expectations of partnerships on any of our licenses. So we own our licenses 100%. There's a straightforward taxation rate of a flat 30%. And the government takes a 3% royalty on precious metals. Today I'm going to focus on talking about two of our key licenses that we own 100% of. So you'll see here a map of the 5 license concessions that we own. We have approximately 1,000 square kilometers, but today we're going to focus on Endong Mia and Cognac, as well as the Oya Dao license, which is under partnership with our Canadian partners, the Homey 5 Resource Group. Endong Mia is actually colloquially known as the Well of Gold in the Khmer language, and it's polymetallic property. We've been focusing on what's called the Canada Wall, which is a porphyry, a copper moly gold porphyry system, with our primary work over the past years. Now we're focusing on the surrounding gold targets around the copper porphyry, as well as some adjacent gold targets that I'll get into in greater detail. In fact, this morning we put out some news that we've identified 4 additional targets just recently. Over the last 6 months, we raised about $1.8 million, and since it's been the monsoon season, we haven't been able to get to property until just very recently. So our work programs are just about to begin, and our primary focus is going to be on the Wild Boar prospect as well as the Canada Wall prospects. So you can see here on the right-hand side a map showing some of the surface results, some of the surface samples that we collected on our last work program over the past few months. High grades up in the 70 range. And we're going to be focusing on an IP program, surface mag, trenching and pitting, getting to targets, and then eventually drilling out both the Wild Boar property as well as the Canada Wall prospect. The Canada Wall prospect, this number hasn't been updated. Now we have nine epithermal gold targets surrounding the Canada Wall copper porphyry system, and we'll be working on developing out our further understanding of those targets over the coming months. There will be a lot of news generated over the next 4 months with all the work programs that we have developed. We'll be busy for the next 4 months, needless to say. The second license, that we're going to be working on is the Cognac license. This was formerly under partnership with Emerald Resources. Emerald's bringing in a 1 million+ ounce mine about 50 kilometers due south of us on the Cognac license. Their focus is primarily on that now, so we agreed to take back 100% ownership of this license. Their first work program resulted in 3.6 grams over 8 meters near surface. We're going to twin that hole with diamond drilling this time around in the next few weeks, getting some structural direction, and then we'll step out from there. The Pump Sarung mine is a NSR that we hold. We sold a 12 square kilometer piece of a license to Mesco out of India a number of years ago. Since then, they've put in a significant amount of the infrastructure. We're still waiting on the final production model to be put in place, but we hold a 2 to 7.5% sliding scale NSR. So at $1,800 gold, we have a 6% NSR on gold produced and a 7.5% on all other metals. We're working closely with the Mesco group to help them along and bring this online as soon as possible. Currently, there's 2 declines of vertical shaft, and they've been stockpiling ore, and we did a test this past year on some of the samples just off the top, and we were grading in the 40 grams per ton range. As I mentioned earlier, we have decided to throw our hat in the ring as far as the oil and gas potential of Cambodia is concerned. The entire team comes with oil and gas experience, and it's something we've been considering for the last 6 years now. We are in the process of negotiations with our production sharing contract, and perhaps I might be able to get into greater detail of that once we get into the Q&A section. But we're keen on the potential there. Offshore, there's oil production coming online with a group out of Singapore called Chris Energy, but no one has put a single drill hole down onshore in Cambodia. But we do see that there's production on all sides of Cambodia, so we're quite keen on seeing where this can move forward. A little bit of background on the strategic relationships. I'll leave that to your readers to look at the full deck. And of course, you know, we always have to look at how we operate in a country like Cambodia. And the reason why we have been so successful in Cambodia is the fact that we have dedicated a lot of time and effort to establishing strong relationships from the community level all the way up to the Prime Minister's office. There's a reason why when he talks to industry, he often refers to Angkor as the gold standard. And we're quite proud of that. So it continues to be part of the operating procedures for the company. I know that my time is tight here. We've done about 18 million in asset transactions and financing to date, and I'm quite excited about the future. So thank you very much for your time.
Thanks very much, Stephen. That was a great overview. Everybody, the last presentation, George Palikaris. George is the president and CEO of Metamaterial. Under George's leadership, Meta has completed 2 acquisitions and has developed partnerships with global companies like Airbus and Lockheed Martin, as well as multiple Fortune 500 companies. Mr. Palikaris has 22 issued patents, a Bachelor of Engineering in Computer Engineering, a Master's degree of Science in Digital Communication Systems, and a PhD in Metamaterial Science. George, great to have you here. Please tell us about Metamaterial.
Thank you very much. It's exciting to be here today and to talk to you a little bit about our company that, as you said, started almost 10 years ago. I'll start by saying kind of the world is a little different today than it was especially a year ago, but even more so during the turn of the century. So one of the things that we are looking at that every great advancement in technology can be attributed to a breakthrough in material. So if you look at through the ages, going from the Stone Age all the way to the Silicon Age that we live in, the digital age, they have been fundamental breakthroughs. In the last 60 years, the digital age, we had the invention of the transistor, and this was driven by the discovery of semiconductor materials and the means to manipulate their properties. So we are now entering a new era, we believe, in material science. And this is driven by advancements in the invisible worlds of nanotechnology. And this is driven primarily by artificial intelligence and new ways of designing and discovering new materials that we'll talk about today. Some forward-looking statements will be mentioned today. And just as an overview, our company has been aggressively growing an IP portfolio over the last several years. We are close to 100 patents. We believe we're going to break through that 100 patent number within the next 3 months. We have built purpose proprietary machinery for nano manufacturing. We have been seeing a very high level of market pool where without a lot of marketing, we have been attracting very large OEMs from a very diverse number of industries. And most of our products basically are nano pattern films that have structural and mechanical, electrical, and optical functions. I'll give you some examples next. I'll start by why you should care. We are bringing a new type of technology to the marketplace. So our nanocomposites have an upside-down approach. We design them using software without stepping into a chemical laboratory. So if you think about companies like 3M, DuPont, BASF, they mix different chemicals to come up with new types of products, new types of formulations, and new types of materials. Well, we start with what does the customer really want? Do they want more transparency, more conductivity, more shielding in a particular kind of frequency range? And then we work with our software, and it takes us about 6 hours with one engineer and our computer software to come up with a new design. In fact, we come up with typically 20 different designs, and there are trade-offs between the different materials. But one thing is certain: we offer lower production cost, the scalable products that are very precisely controlled. This is on the bottom left corner here, an example. We can do this sustainably, meaning we don't need to use rare earths and other types of minerals. We can actually beat the rare earth type of product offerings that are out there. If you compare this to the existing technologies out there, our competition, which is the traditional industry from chemistry, takes them about 6 months for a new material discovery and about a couple of $1 million. So we have a significant advantage when it comes to execution, and we have offered our customers an up to 40x improvement on what was there previously. So we are industry agnostic. At Meta, we design and manufacture these functional materials that go into medical devices, into energy applications, consumer electronics, and even the electrification of vehicles, which is a high growth, interesting market. Our mission is to make products smarter, more sustainable, and help bring the benefits of nanotechnology to the surface. I'll focus very quickly on a couple of automotive applications we've been working on. For instance, a transparent film that goes in sandwiches between two glasses on the windscreen and acts as a display, or on the actual dashboard, diffractive optics. So we take light and guide it and then display it to the benefit of the driver and the passengers. Also in the automotive industry, we have a product called Nanoweb. It's the world's most transparent, flexible, conductive film. It competes with indium tin oxide. Indium is a precious metal that is not in a lot of abundance. We have a nano pattern film that not only is about 80% more transparent, but it's also an order of magnitude more conductive. We can use this to de-ice, defog, use it as a transparent antenna for 5G communications, touchscreen components. Really, the possibilities are endless, but we just make one product, which is this film. And we have a sustainable value proposition in this. We have won multiple awards from the industry, including Best Manufacturing and Global Cleantech 100 in 2019. And we bring forward savings that are really enabling us with customer relationships. Our goal is to take our production for where it is today from 10,000 square meters of product and production to 1 million meters square in a purpose-built facility that's state-of-the-art. We're putting together in Dartmouth, Nova Scotia, under a 53,000 square foot facility. You can find out more in our website, metamaterial.com, and I would love to answer any questions that you may have. Thank you.
Well, thanks very much. At this point in time, I'd like to introduce to everyone Al Turner, who's going to lead the panel discussion. Al's a professional geologist and also the president of the Calgary chapter of the Mineral Exploration Group. Al, great to see you. Thanks for joining us.
Thank you, Sam. Looking forward to it. Okay, excellent. So if we can have all the presenters come on screen, let's go with that. What I'll do, the format will be, I've got a number of questions and I'll circulate them through the different speakers. And then when it's your turn, just feel free to turn on your mic. So the first one's for Stephen with Angkor. On slide 4, you mentioned that the oil and gas license will be approved upon completion of production sharing contract negotiations. Can you explain what those entail and when the negotiations are likely to be completed?
Absolutely. I was actually in Cambodia in early March when COVID was really starting to hit hard. And can you hear me? Are we working here?
Yes, working well.
And we had to end the negotiations early. So we were very close at that point. Of course, we were looking at a very different pricing model as far as a barrel of oil is concerned. So we're back to negotiations probably in early January. We'll be sitting down with the Cambodian government and beginning that set of conversations over again with a $20 barrel rather than a $60 barrel Valnev modeling. So we're really excited about the opportunity, but we have to make sure that it's fair and that it makes sense for the company and for the country.
Great, thanks, Stephen. George, on to you with Meta. It seems that there is a natural partnership between the metamaterials technology and the outer space segment of the aerospace industry. Is Meta planning on expanding into technologies that could be used in outer space contexts, such as satellites or reusable cargo spacecraft?
So excellent question. I can say that we have been very fortunate to be selected as the only North American company to be a member of a very special group of manufacturers and academic partners. We have been selected for the mission to Proxima Centauri, which is 4.3 light years away. And the goal is to create the world's most reflective and lightest weight material that can travel at about 20% speed of light. So it's really trying to create a 10-meter square material that weighs less than 1 gram is the challenge. And we've been very fortunate to be part of this incredible project and program. Our materials are, as I mentioned, very advanced and high performing. So this type of program will really put us to the test and see what kind of materials we can use. And for sure, we will need some more than just commodity type metals. So I would look forward to working with the industry, sourcing those materials for the benefit of our business.
Great, thank you, George. Doug, on to you. So the first question that's coming up from the audience is, what are the name of your twins?
Alexander and Cassandra, Alex and Cassie. So it's been a bit of a crazy week. We just got them back from hospital, so.
Okay. Well, congratulations. Moving on then to a technical question. Can you describe the outstanding schedule of payments remaining on the Cerro de Oro asset in order to achieve the 100% ownership?
Yeah, absolutely. We scheduled that deal in such a way where the bulk of the payments, which were minimal, the total package to acquire that resource and the land was 4 million shares, so less than 1% dilution to the company, and staged payments of about $3 million US. So at the time, you know, with what is a very base case resource, we picked up a project for less than $10 an ounce that we think we can have in production within 2 years. The bulk of those cash payments actually are on the 1st through 4th anniversary of the deal we signed. So the nice thing is, with the first operation Santana up and running, you know, a perfect use of free cash off that is just to fund those modest payments coming over the course of the next 4 years. So yeah, structured to fit in with cash flow coming from operation number 1.
Great, thanks, Doug. Stephen, back to you. You mentioned a low-cost operating environment. This brings up the question, are Canadian standards for health and safety and human rights being observed?
Thanks for the question, and the answer is absolutely yes. They are. We operate at the highest level. I would put our operations up against any questions that might come up in Canada, the US, etc. It is certainly a lower cost environment to operate in when we are looking with local laborers and local staff, and we try and hire as much as we can within the local communities. But environmental impact assessments and social impact assessments are required on all of our licenses, and we adhere to the highest standards internationally throughout all of our operations.
Okay, great. Thanks, Stephen. George, back to you on Meta. With touchscreen technology becoming prevalent, your Nanoweb technology seems well positioned to be quite impactful in the smartphone and tablet sectors as well. I know you touched into the Nanoweb in relation to automotives. Is there opportunity to take this sector to a larger level, such as into home integration technology?
Absolutely. One of the challenges is foldable phones. So if you take a film that typically is currently on any smartphone today, they typically use indium tin oxide. So indium is a transparent metal, as I mentioned, but it's a ceramic. It cracks. Every time you bend it, you have micro cracks. When you bend it below 1 millimeter radius, you can basically make the screen inoperable. And there was a very large corporation from Asia that it was Samsung, it's public domain now, that removed their smartphone from the market. Our Nanoweb basically is so flexible and robust. You can do origami, literally, with it. We have done a torture test, we call them torture, where you can crush them in your hand, open it up, and it will still give you the same conductivity, the same performance. And these are some very exciting ways that we can enable the market with flexible electronics, things that actually don't need to, basically use rare earth metals or other types of rare minerals. We typically can use copper, alumina, but of course we can also use indium, and we can use platinum and gold, etc. So we don't have any kind of restriction in the metals. We are driven by the application and the customer need, and we advise them what should be in that mix, in the material.
Great, thank you, George. Doug, back to Minera Alamos. With the exception of large cities in the states of Durango and Sonora, the Government of Canada has issued a travel advisory against non-essential travel to those areas due to safety concerns. What protocols are in place for the safety of crews and for the safe development of properties in both short and long term?
Yeah, Mexico is no different than a lot of Latin America, and we're seeing that even in G7 countries, restrictions in place. The important thing is our team is basically Mexican based. Our CEO has actually been down there for 9 months straight post PDAC. He was always planning to be down there a lot this year, but he stayed down there, and that's the best place for the mine builder and the team to have been for our shareholders. But we're not fly in, fly out. That said, there are protocols that we put in place to ensure not just the safety of our members, but also the community that really in many ways we have now become part of. When COVID struck, the first thing we did was acquire medical supplies, oxygen tanks, and the like, because we could be the first line of support for the local rural community that we're there. So when it comes to our contractors, they quarantine for 2 weeks before coming to site. We're not having analyst tours. I just had to break that news to an analyst who was going to be down there on holiday in January that wanted to visit. Because social license, and Mexico do permitting right. You can't start permitting without social license. So it's easy to get, but it's easy to lose if you don't do things right. So I think we're helped by the fact that we are a Mexican-based team, and we also understand the country better because of the sheer number of Mexican nationals that make up our senior operating team down there.
Great, thank you, Doug. Stephen, please explain what the free carry net smelter return agreement is with Mercel Gold, and what does it entail?
So Mesco so they're an Indian company. They've been operating in Cambodia for the past 6 years. They brought the mine site up to a certain level of completion. Head frames are in place, as I mentioned. They've got 2 declines. They've got a vertical shaft. Everything is near to operation, but they haven't been able to bring on their production model yet. Now, the model of the NSR was always gold price based, and as I mentioned in my presentation, at $1,800, we're sitting at around 6% NSR. we're keen to see this move forward, obviously, and we're going to do everything we can to assist in their development. But at this stage, we don't own any direct interest in the property or in the mine. We only retain the NSR at this stage. So we work to their whims. So we have to assist if we can. But at the end of the day, I'm quite confident that they are going to be moving forward and bringing that project online in shorter order.
Great, thanks, Stephen. George, another question about Meta. Your GlucoWise glucose monitor seems to be positioned to make a big difference in the lives of people living with diabetes. Can you explain how it differs from traditional blood glucose monitors and what the timeline is for its launch?
Thanks, Mark. So when I started the company, just before actually the inception, I worked in a 3-year program for wearable and implantable sensors. This was before Fitbit was out. That is about 10 years ago. So we were at the forefront of research at that time. And one of the ideas was, how can we measure glucose without drawing blood? It's the holy grail of medical diagnostics. And whoever cracks it may be up for a Nobel of medical physics, by the way. Now, we attempted to break down the problem. There's been more than $1 billion invested in this industry. We're trying to keep a very low profile. We have done human and animal trials that have been successful. And the one thing that differentiates us from the competition is the use of our advanced material, our metamaterial, which solves a fundamental problem. When you have a sensor trying to sense below the skin, the radiation or the ultrasound or the magnetic field bounces or gets absorbed by the skin layer. So only maybe 5% or less of the energy actually goes through. We're not talking about X-rays here. So very little of the energy goes through. That means that your algorithms, your efficiency, your accuracy drops significantly. And with the use of the metamaterial, that was our first patent and our invention. We do what's called impedance matching. We basically make skin transparent to the incoming wavelength of the modality of the medical application. Therefore, increasing efficiency, allowing to sense with higher quality, higher precision, what lies beneath. And for that, we not only have a diabetes application, but we're looking into stroke detection and determining clot versus hemorrhage, looking into breast imaging, determining tumors in the breast, and other things that we have in line stemming out of this fundamental technology. So we're excited about that, and we are keeping, again, a low profile. We're thinking that we'll be announcing soon some exciting applications and results.
Okay, thank you, George. Doug, back to you. The La Fortuna PEA is based on a gold price of $12.50 per ounce and a silver price of $16 per ounce, with a lower cutoff grade of 1 gram per ton gold. The press release that came out last month, just a few weeks ago, that presented the resource estimate for the Cerro de Oro project used a gold price of $1,450 per ounce and a gold cutoff of 0.18 grams per ton gold. Are there plans to revise the resource estimate and mine plan for the La Fortuna project using revised gold and silver values and a lower cutoff grade?
Yeah, it's a very good question. I mean, one of the differences in the cutoff is Fortuna will be a milling operation over a heap leach, so there is a big difference there. But I think in terms of gold price, the Fortuna PEA was done in a $1,300 gold environment, and so when that was locked in, we locked in at $12.50. We did kind of begrudgingly use a higher gold price for the modeling of Cerro de Oro, and I say that because we're looking to build a business that will thrive during great gold markets, but more importantly, survive during poorer markets. So we stress test everything at $1,000 an ounce. We run our models at between 1,000 and 1,250. I think part of the problem in our mining sector, the majors have cleaned up their act, but you're seeing in Q1, for example, gold price averaged $1,500, but there were a lot of producers that were still bleeding on the bottom line. And I think that's because the sins of the past with M&A and project selection has yielded a bunch of projects and a bunch of companies that need higher gold prices to do well. And we're all about building a business model that's sustainable at any point in the sector. So the reason, there's a good reason why Fortuna is being pushed out. It's slightly higher CapEx, but more importantly, that PEA was based on a lower gold price, and yes, it should be adjusted up modestly, but it was also based on a high-grade 5-year starter pit, and we know there are extensions to that. We really want our projects to have a minimum of 7-8 years mine life. So while we're developing the second mine, we will be exploring and adding resource base at La Fortuna at the same time as modestly changing some of those metal inputs and seeing an adjustment in the project's economics. One quick thing, because I know we've all got lots of questions to answer, but in a rising gold price and gold market, you will see a rising cost curve to the industry. As gold prices go up, cutoff grades will drop, strip ratios will go up. You'll actually see a rising gold cost curve, but it's a delta cash flow argument. You'll be producing more gold, and so expect to see higher production in a higher gold price environment, but not necessarily vastly improved margins, because that will be satisfied through taking gold that otherwise would have been waste. So yeah, it's a complicated question. It does need to be modeled at higher gold prices, but there is a big difference between that and Cerro de Oro, because Cerro de Oro is a run-of-mine heap leach with with lower grade and a corresponding difference in cutoff to La Fortuna.
Great, thanks, Doug. Stephen, can you share with us some of the new geological observations that have been made for the Canadian Wall property? You're mentioning the porphyry systems. Maybe could you elaborate on that for us?
Sure. Canada Wall has been an asset, has been a prospect of ours that we've been keen on for years. And because of our work specifically with Cognac out of Japan, we had to take a step back on our 100% owned properties and focus our team on the funded properties, on the funded projects that our partners were bringing forward. So Canada Wall has always been very intriguing to our geology team and to Dennis Huet. We've had a variety of different groups come and look at the early stage work and core that's been drawn out of the Canada Wall. And you get different opinions every time you get a different group looking at it. And we've had some young geologists come in from Freeport, and they looked at it and said, "My goodness, you're looking at a model that is wild. I mean, it's an older porphyry that's really the responsible gold, the disseminated gold that's around this porphyry is from the first structure, and now you've got a secondary porphyry that's intruded through, and that's really where you're getting these high moly." Results coming through. It's been really interesting, and at the end of the day, the more groups we get through of the likes of Xinjiang and Freeport and Cognac and Cores and the various groups that have come through, you always are generating more information. Our core focus right now, and especially in this market, are the gold targets, and we'll be focusing entirely on that this year. This work season, as I say, it's the monsoon's starting to light up, and we are finally getting to a point where the rains are subsiding and we can get to the properties safely, and we're seeing really exciting potential on the gold side. So that's going to be our primary focus. But the Canada Wall copper porphyry is always going to be a priority, but right now we're going to keep it in the background and focus on the gold targets for at least the next 6 months.
Great, thanks, Stephen. George, another question about Meta. Can you explain how your holographic laser protection filter works and why they are a useful tool in the protection of video surveillance cameras?
Thanks, Al. I was thinking of lasing my own camera just to demonstrate, but I didn't want to destroy my laptop. So, but this is an important thing. So this is our first ever application. We partnered with Airbus, the innovation department of Airbus, the chief product security officer, and the design office of Airbus to develop a custom solution that allows pilots to actually see the runway lights and the colors of those lights, but still be able to protect themselves against laser strikes that have been a thing that was a big problem in the industry. Obviously, with COVID, there's less flights. However, the problems you may have seen in your news lately in riots and protests in the United States and elsewhere in France, in Germany, etc. So law enforcement is equally affected, but there's one interesting thing that's happening. You mentioned cameras. So I can tell you that there's been proof that the autonomous vehicles, this mega trend, where every OEM is working to create opportunities enabled by 5G, has been defeated, at least in a demonstration, with a simple $20 laser where you can shine at the camera of the car and basically defeat all the onboard AI and vision systems. So this is where we come in. We have a filter that allows you to actually maximize what you see through it, but at the same time protect optimally your sensor, where that's your eye physically or an imaging sensor that you find commonly in any camera. And we see this as an opportunity to grow into other types of markets that I am happy to talk to investors outside of today's call.
Great, thank you, George. And a last question of the Q&A over to Doug, and this, have to ask you this one because it's a bit of a teaser. On slide 12, you mentioned that Minera Alamos is looking to acquire a fourth asset. What is the timeline for this acquisition, and will Mexico remain your focus, or are you contemplating other jurisdictions?
At any given time, we're probably looking at 5 things. If you'd look back at our presentation a year ago, we talked about an asset number 3, and this year we gave that a name, Cerro. It wasn't actually the initial one we were looking at, but it was on that list of 5. The deal we were looking at, we felt was too prohibitive expense-wise, and I think it's a testament to a team that maybe had 2 years of desktop work into a project, not to just, well, we got all that time and effort into it, we should do the deal. No, there comes a price where you say no. So right now we're looking at five things. I don't know if anything will come off in the next year or the next 2 years, but we're always looking. And so the reason I have asset number 4 there is, as much as anything, it's a placeholder, but it's more than that. It's trying to send the message that we are not going to rest on the platform of these 3 projects. We're not going to be stupid and overly aggressive. I think when companies maybe march to the beat of Wall Street or Bay Street rather than their own drum, that's where they get into trouble. So asset number 4 may have a name at some point. It might be on the list of 4 or 5 things we're looking at right now. It might be something that comes from elsewhere. In terms of jurisdiction, right, if you're going to be a producer, you want to be a multi-asset producer, and we'll fast get to that point. The other thing that you'll look for, and the markets will look for, is, can you be in multiple jurisdictions? Mexico is the perfect place, given our team, given our strength, given the geology, given the low cost structure, to build the foundation. It's always been a desire of mine to add a second jurisdiction at some point, whether that's asset number 4 or asset number 5. It's certainly in the game plan moving forward.
Thank you, Doug. Actually, one more question has come in on the chat line, and it's back over to George for this one. And the question is about capital that you've raised that's non-dilutive, coming from government sources, government money. Has that occurred, or can you speak to that? Oh, your mic's off.
Thank you. So yes, in fact, we have partnered with the government of Canada early on. I think we are at $66 million raised to develop our technology platform, but only half of that has been via industry support and basically equity. The other half has been over the years through government partnerships. We partner with the government to de-risk investments from private investors and industry, but more importantly, to provide a very large level of scrutiny. We were a private company until March this year. We were able to use the due diligence that the government on different programs offered to allow both private investors and industry partners to see that there's a reduced financial risk. And we have been able to partner with Lockheed Martin, for example. We got $5.5 million on a solar program, and we were able to double that money through an SDTC, Sustainable Development Technology Canada grant, for about the same amount of money. And locally, we have been able to get some support from ACOA, Atlantic Canadian Opportunities Agency, in the form of non-interest unsecured repayable loans that have a large period of time to repay them. So there's been an economic drive, and the biggest thing is that I've been very thankful and very happy to be in the position to create a lot of IP with that investment and globally competitive technology that has brought in OEM partnerships with blue chip companies.
Thank you, George. At this point, Sam, I will turn it back over to you. Thank you to all the presenters for fielding my questions.
So anyway, Al, I just wanted to say thanks for leading a great panel discussion. Raj and Mark for putting it together. And a big thanks to George, Doug, and Stephen. Thank you. Great overview, 3 very strong stories, and we'll certainly watch it with interest. And Raj, I think if you can maybe display the contact information for the for investors to get in touch. Great. Okay, and a big thanks to all the investors for showing up as well. Raj, to you.
Okay, well, thank you very much, Sam. Thanks for bringing out these great companies. Thank you also to Al Turner for his brilliant lineup of questions that he worked through with all the participants today. May each of these presenters have great success as we wind up a very unusual 2020 and then onward into 2021, even better, much better. Angkor, Minera, Alamos, and Metamaterials, thank you very much, guys. And to you, the attendees, thank you for your time today. Do go to each company's website, which you can see here on the screen, learn more about them, and check in at TakeStock Live, where we will be posting each of these decks by tomorrow. Be determined in your due diligence, ask tough questions, and bear with me here. I'll just switch slides. I'll let everybody toggle off at this point. Thank you for being with us, and I'll just
thank you very much.
Yeah, thanks, guys.
Thank you.
Yeah, thank you for having us.
All of you. Thanks, Sam. Doug. And I'll toggle off myself here. If you wish to join us on December 16th, we'd love to have you for our virtual Christmas party, which will be a chance to sit down with your friends and our companies and go, well, for this, please go to TakeStockLive.com, which you can see there. Scroll down a little bit, click the button, which will take you, I think, to Eventbrite. If you get one of the first tickets, that's great. If you don't, please sign up for the wait list, and we will, if we get enough interest, we'll expand it and make sure we can have a great party. So at this point, Mark and Raj signing out for TakeStockLive.com.